Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, May 16th. Market with that continued bid, really the direct opposite of what we saw, mid-February through mid-April. Let me put a quote up here from Benjamin Graham, something we have to remind ourselves all the time as investors and traders. The market is a pendulum that forever swings between unsustainable optimism and unjustified pessimism. So what we do try to discuss and convey on these videos, on these weekly market reviews, is the fact that when we are analyzing positions, analyzing markets, be it fixed income, equity, commodity, currency, we try to figure out what can go right and what can go wrong into these extremes, trying to stay a little bit even-keeled. It's an overused expression, but when we have sell-offs like we saw in March and April, where, let's face it, the NASDAQ 100 in the space of 3 or 4 weeks, 5 weeks, was down 20%. S&P was pressing on 13, 14%. That's a steep drop in a tight period. It's not, as an investor and a trader, it's not what the companies are valued at in any one day that's as important as controlling your emotions. And we went through multiple phone calls with many clients and prospective clients and friends that had real concerns, be it actual concerns that are going to play out, or maybe some concerns that emotions pushed them a little too far and it affected their portfolio composition. We talk about sleeping levels. You want your allocation at a level you can sleep. If you're fretting, that's when mistakes are made. As advisors, part of the fee that we charge, and you could say almost the entire fee that we charge, is based on helping our clients remain objective, remain even-keeled, and look for opportunity. And I think we did a pretty solid job through this past 3, 4, 5, 6 weeks. It's funny. There's another quote that one of the main goals of the market is to make I'll paraphrase, the most amount of investors and traders feel stupid at any one time. This is one of the few times over the last 4 weeks with this rip higher, 95% invested, and you're banging your head against the wall every day. So there's never a perfect scenario market-wise. The only perfection is in the rearview mirror. And that's something we talk about as well, right? Recency bias, anchoring, all those emotions that have to be conquered to be successful trading and or investing. Remember, trading is our shorter term bucket, investing our longer term. Another point, we talk about this often. If you can't mentally separate that money, do it physically in an account. Have short-term money, have long-term money, and treat them differently. All points that we go over repeatedly with clients. And as we go on with that relationship, it becomes easier and we reach those goals and objectives. So we'll get another patch of volatility. I spoke last week about when the first 4 months of the year through April are negative, historically, the rest of the year tends to be volatile. Doesn't mean that you can't make money. Doesn't mean that the market doesn't finish up for the year, but it does it in a volatile nature. So we're aware of that, and we'll look for, in baseball parlance, what we look for all the time, and that is to work the pitcher into a 3-1 count. 3 balls, 1 strike, where they have to come in with a nice pitch. Always searching for that nice pitch. You've got the moose on deck, and it's a special week because it's a where in the world is the moose week.
Hi, it's John Musso. I'm the Chief Investment Officer at Cumberland Advisors. It is Friday afternoon on May 16th. This is the Bond Report. We are on the Amtrak Auto Train going north from Sanford, Florida. Leaves us in Lorton, Virginia. It is Amtrak's most profitable route. We're glad we're adding to Amtrak's revenues because we know they're under the gun from Congress looking at a budget, just like a lot of other train lines are. And, the train is sold out, so that is another good sign as well. This week in bonds, we saw Treasury yields up a smidge across the board, a nickel. Call the 10-year bond a 4.43, up from a 4.38. 30-year bond is also up across the board. Why? It's building in a buffer. The buffer is to account for the fact that we still don't have clarity on tariffs. We know there's been a lot of back trading on tariffs that will hopefully continue, but you don't know. It is also building in a buffer because there's no sign that you're going to get a budget anytime soon. And if you get a budget, how much of that is going to be adding to the deficit? So the market's trying to account for that. But the important thing is you haven't had the volatility that you had earlier in April when we were talking about tariffs and the president was talking about firing Jay Powell and bond yields were all over the place. We talked about that. On the muni side, a different story. Yields down a little bit across the board. 10-year AAA down from a 329 to a 327. Other yields down. More importantly, deals very well subscribed for across the board. And what you're actually seeing is some of those deals which were postponed in the wake of Liberation Day when markets were going crazy, right? They are starting to come to market. Obviously, it was a good move. They're very well subscribed for. And part of that is also you're starting to see money flow into the muni market. Bond funds added $760 million this week. That's on top of about $1 billion and change last week. Very good sign for the muni market, particularly as you're starting to get close to the summer months because we have Memorial Day in another week. And we think that's setting up the muni market to probably have a pretty decent summer. And we do think they're still pretty cheap to treasuries on a ratio basis because of all the volatility back in April. We hope everybody has a good weekend. If you're looking for a horse, we like Clever Again, ridden by Jorge Ortiz, and he's out of American Pharoah, the Triple Crown winner. I think he's around 5-1. That's our pick. I'm sure my colleague Matt also has a pick. We hope everyone has a good weekend. Thanks a lot.
Thanks, Moose. And we realize these markets are challenging. Don't hesitate to give us a call, reach out by email. Let's talk about how you can position yourself. See you soon.